I made a little over $1,100 this morning scalping the Dow Jones. I'm going to be breaking down how I was able to catch the lows, scale into where I scaled in, and got out to where I got out for a 3 to 1 R on the day. As well as I will be sharing a tip on what I could have done better to make even more money on this trade at the end of the video. Leave a like, subscribe, and comment any questions you guys may have. Before we get into the video, make sure you guys are following me on Instagram. Lots of free education on the market maker model, as well as this is where you guys can reach me if you guys have any questions or want to talk to me direct. All right, back to the video. Coming into the marketplace here on the daily time frame here, we can clearly see that we do have these prior daily highs as an area of targeting. So on the daily time frame, I am looking at prior daily highs, prior daily lows, as well as prior weekly highs and prior weekly lows as areas of liquidity that the algorithm would want to see. Coming into the New York session, we are close to, so that is an easy area of targeting that I do want to be looking at here inside of the marketplace. Prior to that, we did see we came up into this breaker block here, found that rejection harshly on Thursday, which then swept these prior monthly lows. And from sweeping those prior monthly lows, it does look like we are getting that pullback inside of the marketplace. So yesterday on NFP, we did see that push to the upside after taking out the prior daily lows. And then today we are seeing that continuation to the upside here, reaching potentially back up into the long wick here from Thursday's price action. So we could see continuing into the marketplace this week. We can anticipate the Dow Jones to reach up into that long wick or potentially find resistance here at this level and continue lower. But coming into the marketplace this morning, I did want to see higher prices back up into at least prior daily highs. So we were anticipating longs. Coming down into the H4 time frame here, we do get a little bit more context. As you can see, during London session, we came down into the H4 time frame here, and then as we entered that H4 time frame, buyers stepped into the marketplace, which then gave me that confirmation that price action has found support at this level, giving me that additional confluence that we can reach up into first this Asia session high, and then eventually getting up into those prior daily highs. So coming into the marketplace here, seeing London session being bullish here and creating that low of day only then gave me more confidence during the New York session, anticipate for that continuation to the upside, reaching back up into these liquidity pools. As I come down to the H1 time frame here, we can see this long wick here. When we do have long wicks in price action, especially on the higher time frames like the H4 and H1, we can put a Fibonacci from the high of the wick to the low of the wick, and we can identify the 50% level as that can be a support level. So as you can see, price action tapped into the 50% level of this long wick inside of that higher time frame H4 bullish fair value gap. Lower time frame PD arrays inside of that higher time frame PD array is a very, very good signature that we want to be looking for if we're anticipating bullish order flow inside of the marketplace. So seeing price action find support here at this level during London session and then leave it right, breaking above these highs, coming into New York session, I can then anticipate a pullback inside of the marketplace, preferably back down into maybe this reclaimed order block as a level of support to then see that continuation to the upside back above the Asia session range, as well as above that prior daily highs as our draw on liquidity. Coming into the M15 time frame here, we do have that H1 reclaimed order block like we mentioned, which also has a nested M15 order block here, that lower time frame order block inside of that higher time frame order block here. A very, very good confluence here inside of the marketplace as a strong level of support that the market then can find for that continuation to the upside. We do have this liquidity pool here from the early New York session longs. If they did not take profit here at these highs, then most likely the algorithm will reach back down here to take those early longs out before then seeing that real move to the upside. As well as we are going to mark out the 50% level of this Asia session long wick here. As we can see, we did tap into that 50% level of the long wick as we did open inside of the New York session, and it looks like we are given that retracement here, engineering liquidity at these Asia session highs. So I'm anticipating price action to come lower, find that measurement of support here to then see that continuation higher, right, taking out this engineered liquidity, Asia session highs, as well as reach up into that daily buy side liquidity that we were talking about. Coming down into the M5 time frame here, we did have that New York opening here. We don't usually trade the New York opening, but as you can see, we did whipsaw around, tap into that 50% level of that long wick, and now it looks like we are given that rejection to the downside, this New York open low right here, and then eventually down into that H1 reclaimed order block, as well as M15 nested order block here as support levels. So as the market reaches down into this level, this is where I'd look to put my buy position, and if we can get some type of bullish signature indicating price action has found support at this level, I would then look to add to my position, targeting back above these highs here for a 2-to-1R or 3-to-1R on the day. So let's see how it plays out. I then look to add my position here, stop loss below this low for a healthy stop loss below that order block, and I put my targeting back above here inside of this bearish fair value gap, because I know price action is at least going to come up into this bearish fair value gap, which can net us at least a 2-to-1R. Seeing price action finding support here at this level and not want to go lower, I then scale into my position here near my entry, move my stop loss here just below this low right here, and I keep the same take profit that I used before. Since I'm scaling into my position and adding to my position as well as moving my stop loss even lower, I then have room for a 3-to-1R on this trade idea, and let's see how it plays out. We then eventually reach back up into that bearish fair value gap that we were anticipating price action to come up into, and that was our trade idea this morning for that 3-to-1R. Eventually, price action did continue to see higher prices back above this wick here, but we've already taken out our position. We got a 3-to-1R. We were content on the day. But where I could have improved on this trade is I could have taken my original position off at this bearish fair value gap, move my stop loss to break even, and let that runner run back above this long wick here, which we can anchor the 50% of this long wick as I taught you guys. So I can then put my second take profit here at the long wicks here, which price action did see that pullback into this bullish fair value gap here. This bullish fair value gap, price action did see that pullback before then eventually reaching back up into that long wick we were talking about. So I could have taken profit here at the bearish fair value gap, stop loss back to break even, targeting back above this 50% level of the long wick, as well as this liquidity pool right here that we did create. But I am content with the 3-to-1R for the day. But for the future, if I do wish to improve on my trading, this is something that I can take note of. So that's going to be it for the video. I hope you guys learned a lot from this video and can implement this into your own trading and find success in it. Make sure you guys leave a comment on what you guys want to see next or any questions you guys may have. I'm Arkham. Be safe. I have recently launched my private mentorship here. First, we have the Market Maker Mastery for $15 a month, which gives you guys access to the Market Maker course, access to my pre-market analysis, post-market analysis, as well as trade breakdowns around the Market Maker model, as well as a private community for all members. Then we have the Academy here, which gives you guys access to beginner and advanced lessons, pre-market analysis, live trading, post-market analysis, and trade breakdowns as well. And you guys get access to my live trading for Forex and the index markets every single morning. Plus we have psychology lessons and my full risk management and trade management plan. Then we have access to all my market maker models and daily teachings of the market maker model. Then again, with the Market Maker Mastery, you guys do get access to the private community. Last but not least, we do have access to the Arkham seat at the table, which is weekly Zoom calls, answering your questions, backtesting with members, forecasting the marketplace, as well as psychology podcasts and teachings, advanced topics not taught anywhere else, learned from me, as well as this is only limited to 50 members. If that's something you guys are interested in, it'll be the first link in bio, as well as it'll be the first link in my Instagram bio as well. All right.